Now, just when investors thought there couldn't possibly be more worries and problems, we forgot about the I word. Yes, impeachment for some of us might have been easy to forget about just because there's so much different things happening in the news and it was so much distraction that we kind of just put off impeachment. But here it is, it's a serious topic and it might actually happen. Now, just some housekeeping in this video. I'm going to do my best to not put any bias in here, not put any opinion. I'm just going to be saying the cold hard facts. So in this video, I'm going to be giving you the top 4 reasons why investors should not actually worry about impeachment. So after the stock market fluctuated after House Speaker Nancy Pelosi announced a formal impeachment inquiry into President Trump, experts actually say that impeachment poses very little risk to the economy or the stock market. Now, it's no secret that Democrats and Republicans alike have been harsh of Trump's policies and his rhetoric ever since he was elected. The stock market has actually performed pretty well since he was put in office. The S&P 500 is up 39% since Trump was elected in November 2016. This is due to his corporate deregulation policies and due to his corporate tax cut in 2018. However, it's also no secret that Trump's ongoing trade war with China has influenced market returns and corporate earnings in recent quarters. Now, stocks tumbled after the announcement, but then on Wednesday gained greatly after Trump announced that there would be a potential deal between the US and China. And by Thursday, geopolitical fears had taken over investor sentiment and then stocks trade mostly lower for that day. But with all that being said, the first reason why investors should not be worried about impeachment is because there's a really slim chance of removal. Now, according to predicted after Pelosi announced the impeachment inquiry, the odds of Trump not being able to complete his first 4-year term went from 16 to 19%. Also, according to predicted, the odds of him being re-elected are now at 42%, down 1% from a week ago. And the Democrats' odds of winning are now at 58%, up from 56%. So that tells us that these numbers show that Trump is much more likely to not win re-election than actually be impeached and removed. Given that the Senate is controlled by the Republicans, there's very little chance that impeachment would succeed. Even if he is removed prior to the election, the immediate policy impact would be very minimal. So in the extreme example that Trump is removed from office and then Pence takes over, economic policies would not change at all. There would really be little impact. Experts say that replacing Trump with Pence wouldn't really affect the market at all. It would not be a market catalyst because the policies are once again essentially the same. Number 2. Let's look at how the Clinton and Nixon potential impeachment drama affected the markets. Markets actually rose after the impeachment inquiry into President Clinton at the time in 1998. The S&P 500 rallied 39%. However, it was evident that politics had very little to do with the stock boost at the time. Tech stocks were getting super hot as that tech bubble began to form in the early 2000s, and the Federal Reserve was cutting interest rates. The S&P 500 gained 27% in between his inquiry and the acquittal. In the year following Nixon's impeachment process, the S&P 500 dropped 33%. But again, this had very little to do with impeachment because the market's moves were affected by the economy. There was a mini recession happening at that time. Stocks were in a bear market, inflation was rising, and the oil crisis was raging. So it was purely coincidence that Nixon's impeachment talk was overlapped with dire market conditions. The S&P 500 fell 26% in between inquiry and his resignation. Remember, Nixon wasn't removed from office, but actually resigned before the conclusion could be reached by the Senate, something that Trump would probably never ever do. So yes, there was a ton of uncertainty, but there was a very negative backdrop anyways. So if impeachment inquiry actually affected critical policy, then yes, the market's reaction would change. For example, a lot of investors are worried that the USMCA, the deal between the US, Mexico, and Canada, would be greatly jeopardized. There's also talk of whether or not impeachment would delay the potential deal between the US and China. So while there may be some temporary uncertainty due to impeachment, it's really Trump who has been and would continue to create that market uncertainty. And on that note, the greatest affector of the market would be number 3. The headlines. All of the artificial hype is what really would actually affect the market, if anything. I spoke more about this when I did my video on the top newbie investor mistakes. You can see that video in the description, link will be below, as well as in one of these 2 corners. If you're on desktop, the notification will be there. So the biggest impeachment related risk will actually just be the negative headlines as the process plays out. In other words, it might not actually be the impeachment itself, but just the talk of impeachment that would actually affect the market. We've seen this time and time again where headlines or talking heads on TV are really the greatest influencers on what the market is doing and are really what creating those massive ups and downs and swings. Positive or negative hype for that matter is what's really driving the market in either direction. and it's really not the underlying core factors. Investors should really be paying attention to fundamentals of companies and the markets that are beneath the surface. I've said it time and time again, but you can't just simply form an opinion or make a decision based on what your friend said or what you might have read online. Hype is what makes these news and media companies money, so they'll continue to do it no matter what the circumstances. And number 4, why investors should not be worried about impeachment is because there's really bigger fish to fry. Again, I'm going to try to do this as unbiased as possible, but as the 2020 race moves full steam ahead and reality is starting to settle in, it is looking more and more that Sanders and Warren are looking like strong contenders for the White House. And should they win, corporate America and people who run those businesses would be facing significantly higher taxes. Sanders' income inequality plan and Warren's plan to tax the wealthy would just be giving us a sample of what would happen if the Democrats start to sweep the White House and the Congress next year. Analysts have greatly expressed concern of what could happen to the long-term effect of the market due to these plans. And if the Democrat were to win, it would avoid ratification of the USMCA. The USMCA deal could be a win-win for everyone, but it's becoming political football. The successor to NAFTA has been hamstrung by congressional Democrats for months because they are reluctant to hand Trump a policy victory. The Democrats don't want to hand anything to Trump, understandably, and the impeachment process could just be an excuse for them to say, look, we can't do anything about it, that's just impeachment and how it works. It's a very interesting time we're living in. There's a lot of uncertain factors, but maybe some are just more artificial and hyped than others, but the world is watching. It's important to stick to your classic investor strategies and stick to your plan and execute it. If you enjoyed that video, if you learned something from it, be sure to smash that like button. It just helps with the algorithms, that way more people can see videos just like this. And if you haven't already, be sure to subscribe to the channel. I post videos every single week for you to enjoy, just like this one. And if you'd like to be notified every time I upload a new one, be sure to hit that little notification bell as well, so that way you're notified every time I upload a video. See you in the next one.